Traders at Axis Bank saying the fixed income market is recording improved liquidity from FAAC inflows and the bond coupon payments that came into the system. Now, emphasis remains on the 2028, 2037 and 2049 papers. Tobechukwu Ikpe, Treasury team member at Axis Bank, joins me now for some market updates. Tobechukwu, thank you so much for joining us. Really, we are all in the air of the elections. It's barely 24 hours, and I can see you have a T-shirt on there, which is we are just having some relaxed movement here. But let's take a look at the market now. The overview of what played out from Monday up until now.
Okay, thank you for having me. So for the markets this week, the major activity this week was the NTB auction conducted by the Debt Management Office of Nigeria, where they offered 263.5 billion naira across the 91-day, 182-day and 364-day maturities. So basically it's just to fund short-term borrowing by the federal government. So at this auction, we saw a subscription level of just over the offers of covered about 1.5%, 1.5 times rather, of the available offer. So at the auction, we saw stop rates close at 3% for the 91-day, 3.24% for the 182-day, and 9.9% for the 364-day bill. So after the auction on Wednesday, there were FAAC inflows that came into the system. So this bolstered system liquidity yesterday. We opened at 553 billion, and this drove bullish sentiment in the fixed income market. We saw trades completed at 1398 for the 2028 bond and 1485 for the 2032 bond. So for the NTB auction, these bills that were newly issued at the auction on Wednesday also traded yesterday at around 6% levels.
Okay, now, Toby, let's also look at forecasts for next week. We're looking at an election year. Definitely investors are sitting on the sidelines waiting for who becomes Nigeria's next president. But in terms of focus now, what should we expect for next week?
So as you said, the market is trading quietly today. Everyone's attention across the country is for the 2023 elections, which are scheduled to hold between 8:30 a.m. and 2 p.m. tomorrow. And hopefully it will be a peaceful election. So the next week we expect the markets to open on a relatively mixed sentiment because of the direction of the system liquidity. Next week, the only expected influence in the market is a 5 billion open maturity that is going to come into the system. So for the fixed income market, we expect mixed sentiment as market players might turn bearish in order to fund their liquidity obligations. We expect this also to filter into the bond market, where we will see improved offers. The offers will be higher next week. And for the money market, we expect rates to go up from 10.5 and 10.8% for the overnight and open repo rates next week.
And where do you see investors settling around the curves?
Around the what, sorry?
Around the yield curves.
Well, for the yield curve, for the long end, currently the 2049s, investors really are not focused their attention there for now. Most of the appetite was filled in the last bond auction, where DMO sold 770 billion. For this, for the investors looking for the yield curve for the short end, it might go up next week due to the level of system liquidity that might be depressed.